Well, hello, Vita taxpayers. My name is Jim Simpson, and on behalf of the Maricopa Vita Network of nonprofit organizations and municipalities that offer Vita programs, we have put together this video to help those of you who want to do it yourself with tax preparation using the same professional grade software that IRS gives us. So this video will walk you through exactly how to set up the account and use the software, do that. Plus, using this method that we call FSA, or Facilitated Self-Assistance, you'll be able to get help from us to help you through this preparation. A couple of things, just to a brief overview of the Vita program. Generally, the Vita program is designed to help low-income, elderly, and disabled taxpayers with our volunteers who are IRS certified tax preparers will prepare their return free of charge. Sometimes, especially now in this day and age of the pandemic, it's hard to do this face-to-face preparation. So I think many of you may want to be able to try and do this on your own, which is perfectly fine, and we can help you through that. There are limitations. Usually, sometimes some of you may have come into a Vita site before, and we say, sorry, your income's too high, or hey, you've got a rental property, or you've got business expenses that create a loss or something, and we say that we're not trained to help you do that return. And we've offered you this access to our software because there is no limitation on income. If you came into a site and we said we couldn't do the return because IRS doesn't allow it, well, you can do it yourself. Now, I told you that we will be there to help you do this, and we can help you through the navigation of the program. We can even answer tax questions that you have if it's within the scope of our training. So, for instance, IRS has told us we can't help you with depreciation. And if you have a rental property, you're going to have to do depreciation. So if you use a software, which you can, to claim your rental property, your income and expenses, but you call us up and say, hey, I can't figure out how to do this depreciation. We're going to have to say IRS hasn't trained us to help you with that. But most of the things that you're going to do, we can help you with. So we're available by phone or email. Some of our partners in the Maricopa Vita Network will offer even video conferencing. Not all, but some. So what this video is going to do is walk you right from the very start of when we send you that link to the software, how you create an account, how you navigate the program, how you enter forms. Some of this may not apply to all of you, and this may be a little long video, so feel free to fast forward through the sections that may not apply. We're trying to apply this video to a majority of taxpayers that use this. So with that, let's get started. So if you have requested from one of our organizations the link to the Do It Yourself or the FSA thing, we will have sent you a link to start from. It is extremely important that you use that link. It has a lot of embedded information in it. For instance, if I look at an email, I'll show you right here too. This is the link that I'm going to use to access it. See, it has all of this information in it. This is the only way you can be sure that it's completely free of charge. You know, some folks have some tax preparation services. They say, oh yeah, you can file free if you've got less than 64,000 of income, or do that. And you get all done and say, oh great, so you're done with your federal return. Do you want to file a state? Here, this will cost you a little extra. Oh, you have business income? This will cost you. This software is completely free of charge for the whole realm of tax preparation that you can do. It's professional grade software. If you are asked at the end to pay something, you've started from the wrong link. That's why it's really extremely important that you start from that link that I just showed you. And so when I clicked on that link, you now see my screen. And this is the first screen that you'll see. Welcome to the TaxSlayer Vita TCE Self-Prep Kiosk. And it tells you here, there's no current tax preparation fees. There's no income limitations, no age limitations. Hey, sometimes you may have come into our site and, you have to file returns in 2 states and we say, sorry, we can't do that. Well, you can do this yourself. You can do this. You can file. There's unlimited current year states. So we're ready to start. We're going to say, click continue. Now, what I'm going to do, when I click continue, it asks me to log in. Now, if you have used this before, you created an account with TaxSlayer. By the way, TaxSlayer is the professional preparation software that they provide, that IRS provides us to use. So if you've created an account, you could just log in. I'm going to assume that you have not created an account. So the very first thing we're going to want to do is right up here, it says create account. And what I'm going to do here is I'm going to create kind of a fake account. I'm going to do a fake return that goes through this, and I'm going to get all the way up to right where we stopped before I file the return. So we'll be able to walk you through many of the common forms and things that you're going to do. So first I'm going to say create an account. It asks you for an email address, and this is required. I'm going to use I have an organization that's called Masters of Coin. That's the nonprofit that I do. This email address is important, and you may need to have access to this if you forget a password, or they're going to have to verify things, or sometimes we're going to see in a minute, if you don't want to give them a mobile phone number for verification, you will need to be able to access this account. So use one that you'll know of. Then you can create a username, and it'll say don't use a username or use personal data such as your email address, SSN, or last name. I'm going to put, I'll just make one up here. And then a password, and here when you click on it, it's going to say, hey, make sure that it's at least 8 characters long, and one uppercase, one lowercase, one number, one special character. So it has to have, I will create one here. Okay, I think that will work. It says confirm the password, and hope it's going to let me copy and paste. Yeah, it did. I am going to put my mobile phone number in here, because it really, and I highly suggest this, it really makes the verification process a lot simpler if you can do that. And we're all pretty much getting used to this dual factor authentication that happens here too. And here it checks this box. It says verify my account with text message. So I'm going to say create an account. So now it just sent me a text message that said use this code 609787 to verify. Success, your TaxSlayer account has been created. Now, I would tell you, write down that username and write down the password someplace that's safe and protected. You don't want anybody accessing it, but it's really easy to forget these things, and it's really hard to get it back. Yeah, it's not impossible, but it's just easier to make sure you do it. You may have noticed something popped up on my screen. I use a password manager. There's no way I can remember all of this stuff, that I do. So now we're ready to go. We're going to say continue. So now it's telling you, it's giving you some sales things, but of why this is a great experience. And really what it's prepping you for is on the next screen, you're going to have to do an autograph that allows them to be able to use your information to prepare this tax return. So I'm going to hit continue here. And so here's on this thing that's saying here, give us your autograph. This is the legal, read the legal information below. It does tell you that they're collecting information here. You're providing them W-2 information and you're doing it. It even says, that is, we may use your information to show you additional products if applicable, such as options to pay for tax preparation services. When I've gone through this, it doesn't. It may offer you some other products that you could pay for, like will preparation and all that. I have never gotten spam from them or anything else when I've created a couple of these accounts and do it. So I think you're okay. But so to be able to do this, you're going to have to type in your name, put in the date that we're signing it. I'm also going to say I am filing with my spouse. So and you may have noticed too, something kind of popped up in that screen. And over here on the left, it's got a lot of things. We'll come back and show you this later, but it kind of automatically hides when I move my mouse back and forth to give you more screen stuff. So anyway, I filled this in. I'm going to click on continue. And so now it's going to ask for personal information. So I'll just start putting in some information. You want this name to be, I would tell people, make sure it's what's on your Social Security card, because when you e-file it, IRS is checking with the Social Security database for Social Security numbers and name and ID matches and stuff. So use your formal name. Jim isn't my formal name, but I'm not going to file this return. So then I have to put in a Social Security number. I'll just kind of make one up. I can put in a date of birth. I will use my real date of birth because I've turned 65 this year, and we're going to find that gives me something here. And I will say that my occupation is a nonprofit exec. So, and then I'll hit continue. So then it's going to ask for address, street number. And, I notice on this form, I don't see those little red asterisks, which are saying that's required information. But I think if you don't put in the required information and you hit continue, it's going to come back and give you errors. So I'm going to put in an address. No apartment number. Now, yeah, see, now it has the zip code has that asterisk, but I think you're going to find that you have to put in an address. I'll put in the zip code. And when I do the zip code, it automatically, it's got a database. It knows that, hey, that's in Phoenix, Arizona, right? Then since you're in Arizona, it's going to say select a residency status. Whether you're a full year resident of the state or full year resident of another state, that would be, or you're a part year resident. And so it's asking for this information so it then can create the state return at the same time we're doing this. I'm going to say I'm a full year resident. Some of you may be part year residents. You may have income from Arizona. You live in Wyoming and you come here to, enjoy the sunshine during the wintertime, and you take a part-time job. So you've got to file a part year Arizona return. Some of those are out of what we call out of scope for some of our partner organizations. they don't feel that their volunteers are trained enough to do that. And so they may have told you, they may have turned you away, said, here, but here's an option. So you can use this for doing it. So now I'm going to hit continue. What's the best number to reach you at? Now I had put in my phone number here. This is an IRS requirement for e-filing. You know, you don't have to put in a mobile phone number, but it's best if you do. And it tells you why that this is best for doing it. But you could have also put in a landline, a daytime phone number. So we'll hit continue here. This is a very important screen. So don't blow it off or don't look at it, because you know you may be filing. You can use the software. You can do multiple returns and file the returns for your kids or whatever. But so maybe you know this is saying me, Jim, can be claimed as a dependent on someone else's return. And if you're not sure, click on the learn more, and it can kind of tells you some things too. If Jim was blind or he would get an additional standard deduction for that. So this would be important. Now, here's a really important part of this return that I'm going to spend a second going over. There's a little box right here that says Jim wishes to elect to use their 2019 earned income to figure the 2020 earned income credit and or child tax credit. What this means, and this is new, brand new, it was the last act, the last CARES Act that was passed right at the end of 2020 in December, okay, that said, hey, it was a negotiation that went on, and the concept was that, hey, a lot of people, due to the COVID crisis, they worked through March, got laid off out of their job, and hasn't been able to find work. And that lower income could affect their earned income tax credit, child tax credit. It could also affect if you were self-employed too. I would encourage you to check this box. You're going to have your 2019 return handy, okay? It will fill in this designation for you. Now, this is important, and this is because this is so new. TaxSlayer hasn't completely updated their program or got this working right yet. So it's using a screen that they used to use for earned income for disaster or non-taxable combat pay. It's this box that you would want to use. And TaxSlayer is going to update this. So this will say prior year earned income for COVID. I'm not sure what they'll change the label to be. But now what does this mean? This means you're going to have to pull out your last year's tax return. You're going to have to look at page 1 of the return, and it's earned income that's important. And earned income is that you made from wages or self-employment, but it doesn't include things like interest or dividends or unemployment compensation, things like that. I would encourage you, just fill this in, because TaxSlayer is then going to calculate whichever gives you the better amount, using your 2019 earned income or 2020 earned income. Now, as of today, they still don't have the calculation working correctly. So if you were to go in, and today is January 31st, if you were to go in and fill out this return and look at it, it may not be correct. But remember, IRS will not accept returns until February 14th. TaxSlayer assures us the calculation will be going, and this program will not allow you to file the return until you open it back up, and after February 14th, file it, and then the calculation will be working. So when you get to that point, you're going to want to open up the return again, you'll want to print it out again, because it's probably going to change some calculation, but at least you can get most of this started by now. There's another one right here. It says Jim receives, sold, sent, exchanged, or otherwise acquired financial interest in virtual currency during the tax year. This is kind of a complicated one, but you know, I know some folks, hey, they got laid off and they started getting on this Bitcoin craze and they started changing Bitcoin. Well, if you made money using Bitcoin, you have to pay taxes on it. And actually, this question isn't even asking you whether you made money. It's, did you engage in any transactions? Did you buy it? Did you use Bitcoin to pay for your Starbucks, right? You know, and here's a real good point to tell you about preparing your own return using this software. When you check these boxes, it's filling out a box on the tax return. And when you electronically file, it's going to ask you for some confirmation, and you're going to have to say, I certify under penalties of perjury that all the information on this return is accurate. Even though you're e-filing it, you're electronically signing the return. So this is going to check a little box. If you don't check this box on the return, it's going to say, I have not engaged in any transactions. And if you get audited and they say, yeah, you bought and sold some Bitcoin, well, you know, you filed an inaccurate return, and we don't want you to do that. So better you can check this box and you'll have to do something. So good, let's go on. I didn't engage in any Bitcoin transactions, and hopefully you haven't either. So now we get up to what's your filing status? And hey, you can click on learn more here. And I will tell you that this can be confusing to some folks too. You know, for instance, especially this head of household one. Well, yeah, hey, you know, my wife moved out, you know, the last March, and, you know, hey, I'm the head of my household, right? I pay all the bills. Well, no, this is a tax term and it's got some very specific things, and it's an advantageous filing status. If you're not sure, you can use a little filing status wizard over here that will ask you questions and walk you through it to make sure you claim the correct filing status. Okay. Maybe you know, that's okay. So you could just select this and continue on. I know that I'm married filing jointly. And by the way, just as a thing, even if you separated from your spouse, okay, your filing status is determined on the last day of the year. And if you didn't get a divorce or a court-ordered separation, a legal document, you're still married. And there's one exception to that that might qualify you as head of household. But so just beware. As I say, this gets a little tricky. So here I can select continue. So now it's asking me for my spouse's last name, and I'll say Donna there. I'll make up a social security number. I'll put her correct year of birth or somewhere close to it. She probably wouldn't want me to do that. I'll just say that, hey, she was born there. And she's retired. And we'll hit continue. So now it's asking the kind of some of the same questions about, not all the same questions, because this is a joint return, but still you want to look these over and make sure that any of this doesn't. So now it asks if you have any dependents or qualifying persons. Well, here, I'll just go ahead and make one up. I'll say yes. And I'll say here, I'll say Asia, and I'll just make up, but we're going to make this my granddaughter just to see what happens here. And we're going to make her like 7 years old, something like that. Again, we'll make up a social security number in there. Now it's going to ask questions about your dependents, and read these carefully. Was this person a U.S. citizen, U.S. national, U.S. resident alien? Okay. If you're not sure, you can go Google publication 519 and, you know, look at that, because there's some specific definitions. You know, maybe they lived in Mexico or Canada. That could qualify. So anyway, I'll say yes. What's their relationship? I'm going to say this is my grandchild, and number of months she lived with me. I'll say 12. Maybe you've got students, right? Maybe these are your kids, and you know they're over 18, but they're a full-time student, because that could still qualify them for your dependent. Good. I'll hit continue here. Remember, we can be available to answer these questions for you if you have some questions. Now, maybe you've got, 3 kids. You can say here, add a dependent or qualifying child. Maybe you're taking care of your parents, right? And you could add them using the screen. I won't do any of that. I'll click on continue. Now it takes you to a screen that asks about Irs Identity Protection Pin, or we shorten it to be IP Pin sometimes. And this will be, you would have gotten a notice, and I've seen several taxpayers throw this notice away. They didn't really realize. What happens is if somebody filed a return in your name, IRS knows that your identity has been compromised, and now they're not going to let you file a return unless it's got the correct PIN on it. There's a learn more here. There's a way you can go get your PIN if you've thrown that letter away, but it's a complicated process. You're going to have to create an account with IRS and prove your identity to them, and then they'll give you the PIN if you've lost that. But if you got that PIN and you don't remember where it is, it's not going to let you file the return without it. Another thing I would tell you is just a couple of weeks ago, IRS has allowed anyone to use this method, IP PIN. I, for one, I have used it. Right away, I signed up for it. I don't want somebody filing a return under my social security number. I've been a CPA for 25 years, and way back when, we had to put our social security numbers on tax returns. I have thousands of returns out there with my social security number on it. So I signed up right away for that program. But for purposes of this, I'm going to say no one on my return received an IP PIN. If I just said yes, it would ask for yours, your spouse, if the kids were impacted, if they got one. So you need to guard that information carefully. So now I'll sit here and I'll say continue. Now, the recovery rebate credit. This is IRS speak for stimulus, or EIP, economic impact payment. We commonly refer to them as stimulus payments. Okay. So it says, did you receive any stimulus payment from the government due to COVID-19? Most of us did. Okay. And it says a note, this information is strictly used to ensure that you receive the full amount you are entitled. It will not increase your taxable income or taxes due. Some people didn't get their payment, or maybe they didn't file a return last year, because when they sent out these payments, they were basing it on either a 2018 or 2019 tax return. Now, there was a way you could go in and get it using the Get My Refund on irs.gov, but let's, if you didn't, you didn't. So here we're gonna select all the thing. And in my case, I'm gonna say, yes, my spouse and I received stimulus payments during the first round of payments. Now, you should have gotten a notice, but that notice was, it looked like a campaign flyer from the Trump organization, I would tell you, and a lot of people threw that away. Okay, so, but you need to know how much you got. You may not have gotten all that you were entitled to, because maybe, and there are several reasons, okay, several reasons. Maybe your income was a little higher last year and it phased out. Now, you should have gotten $1,200 per primary taxpayer on the return, but maybe your income was a little higher than 70. Well, married filing jointly, I think it was 150,000. Then it started phasing out. So I don't know, maybe you only got 1,000 per taxpayer. Whatever you got, either get it from that letter or look up in your bank account and find out how much. In my case, both Don and I got $1,200 apiece. I got $2,400. So I'm going to put it in here. Then, what was the second round? This happened just right at the end of December. And just to give you a little background about this, these payments, they were advance payments for a credit on your 2020 tax return. So even though you got the second round of stimulus in January, it was really an advance payment of the credit that's going to be claimed on this return that you're filing right now. This is called the recovery rebate credit. So yes, I did get that second round, and it was $600 a piece. Okay, so I got it. So now the tax program is going to look and see, well, were you entitled to all this? Here's another case. Maybe you had a child born in 2020, and they gave you a payment based on your 2019 return that didn't have that child. You're entitled to more. And so once we get done with this return, TaxSlayer is going to know, hey, they should have gotten an extra $500. I think that's correct. Anyway, it'll calculate it for you. Or maybe you didn't get any stimulus payments, and so now you're going to get a credit on this year's return. So I put in what was accurate here, and in fact, you know what? Just so that I can show you what this will look like, I'm going to say no, I didn't get the second stimulus payment. So that way, when I go look at the return, you know, I can see how that calculates. I'm gonna leave that box unchecked now, because I want this return to generate a credit for me so we can see what it looks like. So now I'm going to say continue. This should let me go forward. Okay, so now it says, now that we know more about you, let's dig into your tax return. I'll click continue. By the way, just as a general rule, TaxSlayer doesn't really like you, except when we get to the Arizona return, there's going to be an exception to this. They don't really like you to go select things from this menu over here on the left. Once you're done, they want you to hit the continue button. And sometimes that's really important, because if you back out of the screen after you put in a lot of information without hitting the continue, it's going to lose all of that information. It usually gives you a warning though. Okay, so right here now I'm on the screen. It says know which forms you need. If you've done your own taxes for a while and you just realize that, hey, you know, TurboTax or something was charging me $50, and hey, my buddy at work said I can go through here and do this, do it for free. Maybe you know exactly what you need to do. Well, that's great. You can say here, yes, use QuickFile, and it'll ask you what forms you need. I'm going to encourage you to say no here, because this way it's going to walk you through and ask you questions, and it may jog your memory. Oh yeah, I did get some interest from the bank account, but no, they didn't send me a 1099 INT. So it's really just good to take your time and go through this like we're going to do here. So I'm going to answer no. I don't want to use QuickFile, and I'll say continue. So now it gives you another chance at that same thing. Do I want to be guided? It kind of selected this, so you can't really tell. Or if I change my mind and I say, oh yeah, it puts this check mark up here, select my forms. No, I'm going to say I want to be guided. I'm going to make sure that this is selected, and then say continue. So first thing is it's now looking at income. And by the way, you're going to see over here on the left, I'm in this federal section. I'm in the income section. If you change your mind, and you know, don't do this in the middle of a thing, but right now I could go back here to income and I could jump to forms if I wanted to. But let's just continue with the interview the way it is. So yeah, do you have any wages or salary? Do you have any W-2s you want to enter? Yeah, I do. So I'm going to say continue. So I just retired as a professor from Scottsdale Community College, and I'm going to put in kind of some fake numbers of it, but kind of get it realistic, somewhat realistic, try to do a realistic return if I can. And this is for me, not my wife. So depending on which I check here, it's going to fill in information down below. Okay, so you don't have to duplicate the information. Here's the first thing it asks you for: employer identification number. All of these boxes, all of this stuff, it has it. You can almost match up the numbers of the boxes. Yeah, so I can see in here there's a box B on this form that says employer identification number. So I'm going to type in that right here. So the employer's name, I'm going to abbreviate this one, MCCD. The address is West 14th. Now when I put in the zip code, it's going to know that, whoops. Yeah, it knows it automatically filled in Tempe, Arizona for me. Now, I'm on this screen. There's a whole lot more on the screen. I've got to scroll down to get to the bottom of it. Okay, here's the country. It kind of filled it in. Now, here it's filling in all of my information. Okay, you know, so it's got my address and everything in there. Now, this is important here. We're going to get down here and it says 1, wages, tips, and other. 2, federal income tax withheld. You can look on your W-2 and all of these input screens in TaxSlayer, they match up to the boxes on all of these forms. So 1 means box 1. And if you go look on your form, box 1 says wages, tips, and other compensation, right? So here's what I tell my volunteers and when we're doing training sessions. If you see it, key it. So you want to make sure that anything that's on this form matches up with what we put into here. So let me show you some examples. Here's wages. I'm just going to make some up. And then federal income tax withheld. Social Security wages. And see, that's box 3. And then down in box 3, now, hey, this has got a different amount for me. Okay. And then Social Security tax withheld. My W-2, I didn't have any of these other things here, but I go down and I look in boxes and hey, in box 12, yeah, I got a whole bunch of things in there. So, and it says here, you can say learn more. When I click on this, it tells you, according to W-2 instructions, the following list explains the codes shown in box 12 on the W-2. If you've got the physical form, you can also turn it over. And as long as you buy some magnifying glasses, you can kind of read what these codes are on the back of the form. So on mine, first code says C. And if I was wondering, what is this? Oh, taxable cost, it says right over here, taxable cost of group term life insurance over $50,000. So they told me $596. But then I got 3 more codes, and I'll do this quickly here. You know, here we've got code E, and that amount was $6,500. I can go look at code E and see what it says here. I know that I've got another one that says code BB. So I can go put code BB. And see, once I filled in that code C, it says, hey, do you have some more? Yeah, I do happen to have one more. Got DD. I think this is the cost of my health insurance. Good. So I've done that. Now, we still got more stuff. So keep scrolling on down and look at these boxes. Again, look at your W-2 very closely. And I look at mine, and in box 13, sure enough, box 13, it's got that little thing checked right there. 14 doesn't have anything. So it looks like don't have any of this stuff, but here I go down to box 15 and yeah, sure enough, I do have some state stuff. I want to select Arizona. The employer's state ID number is 07-85026. Okay. State wages, that's in box 16, 55. Here, I'm going to match this to what I put up here. I'm going to just say it's 50,000 to match what I had up there. State income tax, 1907, that's withheld. I don't have any of these things. So I'm done with this W-2. I'll click on continue. Okay. Especially this year, you know, a lot of taxpayers got laid off in March. They got another job. So you may have to, sometimes we see folks come in, they've worked 4 jobs during the year. They got 4. You can add as many W-2s as you want by clicking this button. I'm going to just leave it at 1 for now. So we've got that done. I'm going to click on continue here. So now it asks me, did I get a state and local refund from my tax return? Now in Arizona quit mailing you. It used to be a 1099-G, they would mail you. So you need to be able to answer this question. You need to have access to your last year's tax return and look at it. Now, this screen is only really important if you itemize deductions in the prior year. But again, you probably should look at your tax return and then go look and see whether did you take the standard deduction or did you put in a list of itemized deductions. This is only really important if you itemize deductions. So just for fun, and by the way, not even for fun, I did receive a refund last year. I'm going to say yes, and I'll hit continue. Now, the first thing you need to look at, this is really important, if you did not itemize deductions on 2019, you do not need to complete this worksheet. Now, in my case, I got a state tax refund, but I didn't itemize deductions. I took the standard deduction. But if you did itemize deductions, a portion of it of the refund may be taxable. You may have gotten a benefit last year by deducting state taxes, and then you got a refund of some of those taxes you deducted, and then you got to go through some complicated things. It's not that complicated. You just have to read, you have to have last year's tax return, and then you've got to fill in this amount, or answer these questions right here. Now, in my case, I took the standard deduction, as a lot of people did, because it went up so high. So I see right here, because of what it tells me up here, I did not itemize deductions. I'm just going to say cancel on this because, and then now it takes me to the next screen. Did I have any interest and dividend income? In other words, did I receive a form 1099 INT or a 1099 OID or a 1099 DIV? The 2 most common are 1099 INT and 1099 DIV. And yes, I did receive some of that. And I will hit continue. So it says interest and dividend income. Did you earn any interest or dividend income from a bank, firm, or financial institution? Yeah, I did. So I'm going to hit begin. By the way, the tax law says you have to claim all of the money that you earn, okay, even if you didn't get a form for it. And some banks, you know, they don't have to file a form unless you earn so much interest, but you're supposed to claim all of your earnings, okay? Just keep that in mind, okay? Even if you didn't. So here I'm going to say begin, and here it's going to ask me, well, which form did you get? And I'm going to start with a 1099 INT. I actually got one of these. I'll hit continue. Who was the payer? This was Vanguard. I'm going to pull up that Vanguard form, okay, just so I can be able to put in their employer identification number, which was 23 dash, it doesn't let me do the dash 2019846. Okay, looks like it's doing a social security number, but it's not, it's the same thing. Okay, I don't see the little asterisks here that I have to put in all of this stuff. So I'm going to just see if I can skip it. And we'll say that I got $100 of interest income. Again, here now you're going to see these boxes. And you may have gotten a form that really has little boxes in it. Or in my case, I got what's called a consolidated statement that combined 1099 INT, a 1099 DIV, 1099 proceeds from broker, 1099B. So, but even though it looks a little different, it all says exactly the same information. On that statement, as I look over here, it shows box 1, interest income. So I'm going to put in box 1, interest income. If there was an early withdrawal penalty, there would be something in box 2. Or if you had federal income tax withheld, there'd be something that says box 4, federal income tax withheld. So, and also, there's name. Now, so I think we're okay if you had state withholding. I'm going to say save and add another because I've got a DIV. Now, it is telling me, now look at here. State is required, zip code is too short. Okay, so let's put in their zip code. It's 79998, okay? And okay, now it fills in this. Now it's gonna ask, is this Jim, Donna, or joint? Okay, I'm gonna give you a little clue. This field, and you're gonna see it on other forms that you fill out, it's really only important if you want tax layer to compare whether you would have been better doing married filing joint or married filing separate. I will tell you in Arizona, we're a community property state, and that means half of Donna's income is mine, half of my income is her, half of her withholding is mine, half of mine is hers. With some very rare exceptions, it's never advantageous. It's almost 99.9% of the time, it will never be better to do a married filing separate return if you are married in Arizona, okay? And right now, whether I choose Jim, Donna, or not isn't really going to matter. I'm just gonna leave it at Jim. So now I think I'm gonna say save and add another, okay? Because this time now I wanna enter in a 1099 DIV, and I'll hit continue. Okay, again, this came from that consolidated statement. So I'm going to say Vanguard. I'll put in, what was their number? 232019846. Okay, so I learned from the last time I don't have to put in the address, but I do need to put in a state was Texas. And I needed to put in a zip code. I could have put in the zip code first. 79998. And then it fills that in. Okay, so now I want to match up these boxes, right? And so right here, let's say that I've got ordinary dividends of 100. And then in box 2, it says, oh, hey, these, $90 of those dividends were qualified, meaning they're going to get a lower rate of tax on it. And then I look down and I see, well, there's nothing else filled in on this form. So I think I'm pretty much done with this form. But look at your form carefully. If there's an amount filled in, go find the box. Maybe there might have been, oh, federal income tax withheld. You may have told Vanguard to withhold federal income tax. It'll say box 4, federal income tax withheld. Go fill out those boxes. If you see it, key it. So now I'm pretty much done with interest and dividends. So I'll click on continue. So now I'll hit continue. And now I'd ask you, hey, did you earn any interest or dividend from a bank, brokerage, or firm? So if I knew, oh yeah, hey, my credit union, I know I earned $10 on that. Go in here and add in another one, just fake it out as if you got a 1099 INT so that you're sure that you claimed all of your income. In my case, I didn't, so I'm gonna hit continue. So now it takes you to, this is a screen of forms. You need to look at, here's the income screen, and here are all the things. You should have all of your documents sitting beside, and you ought to see, hey, did I get a 1099-G unemployment compensation? And a lot of our clients did. We all know what happened to unemployment here. And if we did, we're going to want to click on this. And again, just fill in the form. It's really not that simple. We've already done the 1099 INT. 1099Ks, if here in this example, you got laid off of your job and you started driving for Uber or Lyft or DoorDash, they would have sent you a 1099K. And you're going to use that to, by the way, that means you're now self-employed. You're working for yourself. And I'm going to show you in the next screen what we do here with that. But for some reason, Uber and that, and I won't explain why, but they report your income, and they also give you mileage information on that 1099K. There's also a 1099 miscellaneous. Now, this is new this year for those of you who've had some experience. Usually, if you work for yourself or you were an independent contractor, you got a 1099 miscellaneous, and box 7 said non-employee compensation. IRS has changed that this year. They stripped out that box 7 and put it on its own form called 1099 NEC. You still may have gotten a 1099 miscellaneous if you had royalties or rents or other income. If you're Native American, you may have gotten one for your per capita payments or things like that. So if you got one, click on this and fill it out, just the way the form is. In my case, I'm going to walk you through doing this simple business return because I think a lot of our clients are doing that. If you earned money working for yourself, you're in business for yourself and you have to file a Schedule C. So here, I actually do have unemployment. I'm going to click on this Begin 1099 NEC. And this is for me, not my wife. I'm going to put here payer's name as Higher Learning Commission. And there's a code is 60604 1413. So it filled that in, okay? Now remember, this is the payer information. I earned money from the Higher Learning Commission for doing consulting, accreditation work is what I did. So I did that. What's the payer's TIN? Okay, and it tells you here also may be found in the box labeled payer's federal identification number. So if I look on my form, there it says payer's TIN, and that's 36440. So, and then recipient, I received the money and it filled in all of my information. Okay, now it asks me how much, and I just go look in box 1, and I'm going to make this up because we're going to do this. I'm going to say that I got $10,000 from them. They didn't withhold any tax. There was no state information. So that's really all that there was on this form. Okay, so I'm going to say continue. Now TaxSlayer recognizes, hey, you got non-employee compensation. That means you are an independent contractor. You're in business for yourself. You have to file a Schedule C. Now, if you already had one in TaxSlayer, it would ask you, do you want to add this 1099 NEC to your existing Schedule C? Well, I don't have an existing. It says here, as it turns out, your 1099 NEC gets reported on a Schedule C. But don't worry, we'll help you get that form set up. And I'm going to say create a Schedule C. So is this my business or Donna's business? And, you know, in this day and age, you may find, you know, in your household, you may have both gone to work doing stuff, you know, so out of that. So business name, most of this stuff I can leave blank because I am a sole proprietor. You've heard that term before. It's just using my social security number, my home address and everything. But you do have to put in a business type here. You got to click for a list of business codes. And if I start scrolling down this, you're going to find, man, this is a pretty big list. Here's a really good clue. On all of these forms you got, if you're using a computer, you can hold down your control key or the command key if you're using a Macintosh. And while you're holding it, hit F. And way down here on the left, bottom left of my browser, it's opened up a search box, and I'm going to look for consulting. And it takes me here and it says, okay, other professional, scientific, and technical services, manage scientific and technical consulting services. Well, that's kind of what I did. I was doing accreditation work. So I'm going to click on that and it filled it in for me here. And it truncated this thing. Don't worry about it. It's okay, but we've got the right business code in there. So now I'm going to say continue. Okay, so we've already done the basic information about your business. Now we have to do questions about your business. So I'm going to say begin. It asks you for an accounting method. I won't give you definitions of that. Almost all of you will be on a cash basis, okay? Especially if you're doing Schedule C, okay? You will probably not have inventory unless you've really got a retail shop that you're doing. And again, these things, even if you called us for help, that would be out, what we call out of scope, outside of the training that we have. If you've got inventory, you probably need to get a paid preparer to help you with this tax return, okay? This is defaulted. Check if you materially participated. Prior year unallowed loss, you probably wouldn't have had any of that. Oh, this is right here. It says check here if you made any payments in 2020 that would require you to file forms 1099. That would be if you had people working for you. I'm assuming most of these you didn't really have any of that. So we'll leave that unchecked, okay? So now I think I'm ready to hit continue on here. So now it asks me about income. Now I've already put in the 1099 NEC, but I'm going to click here on edit anyway. And the reason I'm going to do this is it says, look here, it says total income from Form 1099 NC. So it's already counted that, okay? But what if you're an Uber driver, and if you put in that 1099K, it's going to walk you through doing the same things we just did. And this would say, here's your income from the 1099K. But maybe you also got cash tips from your riders. Or maybe I went and did some work for a client who didn't give me a 1099 because they weren't required to. So I may have to put in other income. And I will say, just for fun, just so that I can check and see how this works out, I'll say that I earned another $500 working for here. Okay, so we'll see what happens here when I go look at the Schedule C. So I got income. You shouldn't have cost of goods sold unless you have inventory, but you probably have some general expenses. I'll click on begin there. Okay, these are the common types of expenses. You can read through these, and you should have a good accounting of what your expenses are. You know, go through your checking account, your credit card statements, or maybe you've kept an Excel spreadsheet. That would be good. You know, you really want to catch these expenses. Self-employment income, when you get done with the net profit from self-employment, not only do you have to pay income tax, you have to pay self-employment tax on it. It's kind of a double whammy on it. So you want to make sure you catch all the expenses you're entitled to, okay? In this case, I'm going to just put here that I had travel expenses of $5,000, okay? Just to make it. And then I'll hit continue. Now, those were kind of predetermined expenses on Schedule C, the general expenses. You may have also had car and truck expenses, and I'm going to spend a moment with this because it's very common for our taxpayers for this. So I'll click on begin, and yeah, I've got a 2018 Prius. I'm going to say I just put this in service this year, 2020. Now, look at these, and even though it doesn't show the red asterisk, you pretty much have to fill in all three of these. I bet if I didn't, it would give me an error. I'm going to say that I drove 200 business miles. What is commuting? And it doesn't give you a learn, but commuting is the miles that you drove to work when you worked for somebody else. They are not deductible miles. And IRS asks for this information on the tax return because a lot of people who work for themselves, they try to deduct commuting miles. Generally, your commute is the first trip of the day and the last trip of the day. Anything in between, if it's business related, you can deduct those miles. So if you're an Uber driver, when you leave the house to go pick up your first fare, those miles aren't deductible. But then from there, you drop them off, you go pick up another fare, you drop them off. Those are all deductible miles, okay? And I think Uber kind of tracks that for you and gives it to you. And that's important because I'm going to tell you, but maybe you worked for somebody else the first 3 months of the year. You got to go figure out what your commuting miles are. I retired in July. I know I worked half of the year. I know I drove 50 miles a day commuting for that, 200 miles a week for 26. I'm going to put in 5,200 miles that we're commuting. Then it'll ask for other. And really what this is, because the tax return asks for the total miles you drove in the year. Okay. I'm going to say that I've got about another 4,000 miles of other. Now, look at these 4 boxes. They're very important. Check if you have another vehicle. Yeah, I do. I got that. Check if that vehicle was available for personal use. Yeah, these are all boxes that go on the tax return, and you sign the return. And these next 2 are really important. Check if you have evidence to support your deduction. Now, the tax law says you can only deduct mileage if you've got evidence to support it. You've got to check this or it's not going to be deductible. The tax law also says, even if you have evidence, it's got to be written. Now, they don't really say how. You might keep an Excel spreadsheet. You might keep just a little log in there. You might, at the end of the year, go on. Of course, if you're doing Uber, they sent you one that says, here's all the miles we tracked. You may have to adjust those miles. Find some way to create a written record of what your miles are, because you're signing a return that says you've got this evidence. And through my experience in audits, if you've got a Schedule C, that's one of the first things they look at. So many people working for themselves, they try to deduct personal mileage as business. So they look for that. Okay, they're not going to throw you in jail, right? If you can't provide proof of it, they just disallow the deduction. And it costs you a chunk of money plus penalties and interest. Okay, so don't let me make it look like you're going to get thrown in jail over it or anything. Okay, so now we're going to say continue. One other thing about the Schedule C. Okay, so I could add a different, maybe I used my wife's truck to do some of this, but I didn't. So I'm going to say continue. One other place here that I'm going to say is other expenses. So that box under general expenses kind of had predefined things. Maybe you've got some expenses that just don't fit that category. You can click here under other expenses and put in a description of what those expenses are. Okay, I won't do any for that. You should not have to mess with qualified business income deduction. Expenses for business use of your home, be very careful of this. And I would click on the learn more. Most people do not meet these definitions. And by the way, if you call us to ask for help, this is one of those things that are what we call out of scope. Okay, so I'm done with Schedule C. So I'm going to hit continue here. So now it takes me back to income. We were right here. We left off right there on 1099. And by the way, yeah, I did get a 1099-R and my wife got a Social Security statement. So I'm going to input a couple of these here real quick. Let's start with the add or edit a 1099-R. I told you guys I retired this year. So I got one from the Arizona State Retirement System. And I'm going to go look at that. $1099-R, and I'm going to put in their number. I'll just abbreviate. This is the Arizona State Retirement System. Filled in this. I don't need the recipient information. It populated this for me because I told it that it was me. Okay, let me go back up to the top here over to the right-hand side. Again, I've got the form sitting right in front of me and I see it, box 1, gross distribution. Yeah, that's what that says. And I'll kind of make up a number. Let's see, I got 23,000. Box 2, oh yeah, there's an amount there. We'll say it was 23,000. Whoops. Oh, you see what happened? It filled it in automatically for me. But then, and it warns you right here, taxable amount is automatically carried. You may have a 1099 that is special from IRAs or annuities or things like that, that you really have some more complicated work to do. Maybe not all of it is taxable. In my case, all of this retirement for me is taxable. So it's pretty simple. If you have one of those special situations, call us and we'll kind of help walk you through that. But now I want to look and make sure, are any of these boxes checked in here? Okay. Oh yeah, I did. I had some federal income tax withheld here. I'll put in what was withheld there. Oh, and then yeah, in box 7, it's got a distribution code. I'll put 7. If you want to go look and see what that means, that'll say normal distribution. And hey, I do have some state information down here. Yeah, tax withheld, box 14. Sure enough, got some tax withheld out of that. Okay, which state was it in? Arizona. What's their ID number? 15B, yeah, 860239. Okay, none of these other boxes were held. It automatically filled that out for me, but it's kind of got this little red line because it could be possible the state isn't quite the same. So I'm going to say save and enter another. Hit continue. I hope it's going to take me back to, yeah, it did. IRA pension distributions. See, this is where we started when we said add a 1099-R. But now what I want to do is my wife got Social Security. So I'm going to click on begin. And first it's going to tell me, it tells me exactly what box to go look in, right? And this is saying Jim's Social Security. Well, no, I'm not on Social Security yet. We'll put in my wife's. We'll say she got $12,000. And I didn't have any withholding done for her. But if I look on that statement, she did pay for Medicare premiums. I'm going to put in like $1,735 here. Okay. So this is entered in her Social Security. Good deal. Continue. Okay, well, I've added in all of those things. I don't have any more of those things. I'll hit continue. Okay. So I'm looking down here, no alimony. Here, you may have had capital gains and losses. I'm not going to go through one of these. If you've gotten used to entering information, you just follow the instructions and have that 1099-B in front of you, you can probably get through that, or call us up and we'll help walk you through that if you need some help with it, okay? We've already done a Schedule C. This would be just if you had to go edit it or done all of that. Supplemental income and loss would be if you had a rental property or a K1 from a partnership or an S corporation. Those are more higher end, and again, call us if you need some help with that. Less common income. This tells you, gambling winnings, cancellation of debt. Maybe you got some forms that you couldn't see where that is. Go explore this. Here, I'll just click on it for a second. So like maybe you went out to the casinos and you hit the slots and they gave you a W-2G. You want to put that in, right? Or maybe you had cancellation of debt. You got this form 1099-C. So here's where you would put in K1 earnings if you were a partner in a partnership or a shareholder in an S corporation. Okay, I won't go over those. These won't apply to most of our taxpayers too. So I will say continue from here. Takes me back to the income screen. I think we've got all of the income in that we're going to do. Yeah, see down here? Let me talk about this. I'm back to here to where do I want to be guided or do I know the forms that I want to enter? So I'm back here. Standard deduction was doubled a couple of years ago. The TCJA, the Tax Cut and Jobs Act, or what we say the Trump Act, doubled the standard deduction. We found a lot of people do not itemize deductions anymore. You have to, first of all, and it's not criteria, but I will basically explain the major itemized deductions would be medical expenses that you have to have a lot of them that weren't covered by insurance. Okay. Mortgage interest is the big one. Okay. Real estate taxes is a big one. So usually if you didn't own a home, it's not likely you're going to itemize deductions. State income taxes could be a big one, but not for our lower income earners because they didn't pay that much in state income taxes. Those are kind of the big ones. Charitable contributions could be one too, okay? But in this return that I'm filing, our standard deduction is going to be like $27,000. Man, that's a lot of itemized deductions. But if you're not sure, go ahead and click on here, say guide me and go through the forms. Okay, it's going to ask you about childcare credits and things like that. Here. So right now, hey, I've never itemized. I have before that, but I'm going to say let's skip the deductions. I could always, let's say that I've done this and I've realized, no, I want to go back. I could go back to this menu over here and click on deductions and come right back to that. Say, hey, select my forms. I'm just going to do this so I can enter in some itemized deductions. Okay. And first of all, it takes me to a screen right here. There's adjustments to income. Maybe you had educator expenses, or you had a medical savings account, or student loan interest. Some of these are pretty common. You may have gotten that. Here's the screen you're going to put those in. Here's the credit screen. Okay, maybe you had child and dependent care credit. I told you in my fake return here, I've got my grandchild here, and if she had to go to daycare so that I could go to work, I might be entitled to a credit. Go ahead and explore some of those things. Education credits are very common. They can be pretty complicated. Maybe your son or daughter is going away to school, and these would be, and I'm going to tell you, go look at this, see what you can do, but feel free to call us and we'll help walk you through some of those things. Here would be itemized deductions. If I clicked on itemized deductions, here are the main itemized deductions that you would put in. And I'm glad I did this because part of the CARES Act said that even though I am filing, that I am going to take the standard deduction and not itemized deductions, I could get $300 of charitable contributions, which I would qualify for. And I need to get into this screen to be able to do it. So where did I go to? I went to federal section, I went to deductions, and then I clicked on itemized deductions. Here's where you could put in your medical and dental expenses, but I warn you, those expenses, and you can't count expenses that you were reimbursed for by insurance, had to be things out of pocket that you paid for, like co-payments and deductibles, or maybe you had to pay for some procedure that wasn't covered by insurance and it had to be medically necessary. Facelifts don't count. Okay. But those expenses have to exceed 7.5% of your adjusted gross income. Okay, I just put in a bunch of income. You saw me put in 50,000. 7.5% of that is about what, $3,750. Unless you don't have insurance, you're not likely to meet that threshold. Here are the common ones. Mortgage interest. I did have a little bit of mortgage interest, but it's nowhere near enough that's going to get me. Taxes you paid. Here you can put in, first of all, it will take your state income taxes, but that'll take that from the withholding. But maybe you had to pay in from last year's tax return. That would be a deductible expense. Or maybe you've got some sales taxes. You purchased a large, you bought a new car or a boat or RV or something and paid a huge amount of sales taxes on it. Your vehicle license tax, meaning car registration, although it's only the portion of your car registration that's the tax portion that counts, which is the biggest portion of it. You could put in all of those things. Here's gifts to charity. I'm gonna enter in my gifts, a couple gifts to charity, because I know I'm going to get credit for it. So I'll say begin here. And so here it even tells you, you may qualify for a tax deduction if you made cash charitable contributions to a public charity. If you take the standard deduction, which I'm going to do, you can deduct up to $300. If you itemize, you can deduct as much as 100% of your adjusted gross income. Okay, so in this case, I deducted expenses to my nonprofit, which is Masters of Coin. Okay, and this was a cash contribution. Actually, I made several during the year, so I'm just going to say I made it on the last day of the year. I could enter them in by date if I wanted to. It's really not necessary. I'm going to say that I gave them $2,000 bucks. And continue. Okay, now I also did do another contribution that we're going to find that in Arizona, I get. So I'm going to go ahead and add that cash contribution and say that this was to the Faculty Foundation. I did it in cash. Again, I did it through various parts during the year. So I'll use the last day of the year. And I gave them $800, which to maximize my state tax credits, which I'll explain when we get later. And hit continue. So now I've got some charitable contributions in there. By the way, if I look at that and say, oh man, I just found another one to Masters of Coin. See these little 3 dots over here? I could go edit this and change the amount, but I'm not going to do that now. So here we'll say continue. Now, oh yeah, I could have had some non-cash donations. Okay, you gave some boxes to Goodwill, a couple of little things to guide you on here. If you, first of all, you have to value it at fair market value, not what you bought it for. Okay, it has to be, usually we say thrift store value. And if you have no idea, Goodwill or St. Vincent de Paul or some of those things will have, they've got little charts that say, yeah, 3 pair of used jeans, here's what they're worth, right? Fair market value. So you could go find some fair market value. You need to keep a receipt. Okay, it doesn't have to be special. You need a record. I shouldn't say receipt. Okay, you need a record. Mark it on your calendar what you gave, who you gave it to, and how much you valued it at. Okay, that's a requirement for it. If they are over $500, you've got a whole special form, and you really do need the receipts. You've got to put in all kinds of information about it. Okay, so this is all we're going to do. I'll say continue from here. This still has unreimbursed employee business expenses, which the Tax Cut and Jobs Act took away. There's miscellaneous deductions. Okay, so here's one where you might have, remember, what if you had those gambling winnings, right? You got that W2G from the casino, but you said, man, I didn't win any money. I dumped all that back in and 1,000 more into those slots, right? Well, so, hey, can I deduct the loss? Well, you can deduct losses only up to the amount you won. You can't create a loss that offsets other income. And only then if you itemize deductions. So if you take the standard deduction, you're going to have to claim the income from that W2G, and you're not going to get to deduct anything against it. So there's some things to keep in mind, but you would put that here under miscellaneous deductions. So I'll say continue here. So, and by the way, if you're not sure or you're just curious, go into the itemized deduction screen and enter everything that you can. And then you can go through here and it can give you a screen to where it'll compare. Oh, I've only put in 5146 and my standard deduction is 57,400. Actually, I could have put in mortgage interest and real estate taxes, state tax. I probably could have got that up to 12,000, but I'm nowhere close. So I'll say continue here. We'll say continue here. So then we're done with income and deductions. See how it's following this over here on the left? Takes me to other taxes. We're not going to spend a lot of time. I'm just going to explain a couple of these things in case they might apply to you. Maybe you took a distribution from an IRA or other, they call them qualified plans. Okay, so you should have gotten a 1099-R, and what this is the additional taxes. Let's say you're not 59 and a half. Not only will you have to pay tax on it, unless it was a Roth account like the one I put in. Oh, I didn't put that in. I used my ASRS one. Never mind. You may qualify for an exception to that penalty. You know, if you're under 59 and a half and you take an early distribution from that, you've got to pay income tax on it, plus you got to pay a 10% penalty. But there's some exceptions, and common exceptions have been if you take money out to buy a first-time home purchase. And that's a pretty loose term. If it's like first house you bought in 5 years, okay, you know, even if you bought a house when you were younger or something, you could be excused from that 10% penalty. Or you took it out to pay for education expenses, you could be excused. The CARES Act also gave some exceptions to those penalties. If you had to take a distribution because you were laid off from work due to COVID, or you had to, even not laid off, you just, you know, you caught COVID and you couldn't go to work, or your family members caught COVID, you know, so here we're going to have to help you through some of those if you can, or you'll have to do some research on those. But here's how you could get away from paying that 10% penalty. None of our clients are going to be subject to any of this stuff. Self-employment tax, now I just created a Schedule C and I'm going to have a profit from that. I'm going to have to pay self-employment tax. The self-employment tax is the equivalent to Social Security tax that gets withheld from your check when you're an employee. And the bad part about this, and I kind of alluded to it earlier, when you're self-employed, not only do you have to pay income tax on your earnings, you've got to pay self-employment tax. And here's the double gotcha. Not only do you have to pay the employee share, you've got to pay the employer share. When you work for somebody else, you're going to find 7.65% of your pay got withheld, and then your employer matched that. So it was a total of 15.3%. You're going to find that there are some taxes paid on that. If you're self-employed, it's too much detail to go into here, but go look through the CARES Act and some of the potential that you have for deferring some of those taxes too, or call us and we'll help you. Okay. So we're going to continue for here. We're nearing the end. We're getting close to there. Payments and estimates, you know, it's quite common. You know, you may finally, you're trying to do this stuff and you're working through it and can't get help. You can extend your tax return up to October 15th. Okay, that's the time to file. You can't extend the time to pay. You're supposed to have paid in by April 15th, either 90% of the tax that's complete, that's going to be due on your final return, or 100% of the prior year tax. So if you want to be sure you don't have any penalties, they're not huge penalties. It's really just interest on the amount you should have paid in. But if you want to avoid that, go look at last year's tax return, see what the tax was that you owed on that one, look at all the payments that you paid on this return, and make sure you put in 100% of that. You can pay in, you can use this program to file an extension, and you can even use this to have the money taken out of your account, or just print the form. You don't even have to sign it. Mail in a check with it, and file your extension. So, and maybe you're going to have a refund and you want to apply that payment to next year's taxes. You could do it here. Maybe you started working for yourself in April and you did a lot of research and you realized, hey, IRS wants me to be paying as I go on this, right? And you started making estimated payments, you know, based on what you guess is going to be your income. Here's where you would enter those estimated payments. Here, maybe you made them to the state too. You could put that in. Here's a screen also. Hey, I like this working for myself stuff, and I know I'm going to have to make estimated payments. You could print out vouchers to pay your 2021 estimated tax payments, which will start on April 15th. Okay, so these are things that you could do in this software. Here's some miscellaneous forms. That last form that I just showed you was the payment you would make on the extension. Here's where you would actually prepare the extension. And it's just a couple of questions. You know, how much tax do you think you're going to owe? How much have you paid in? How much are you paying with this extension? That's it. Okay. There's a few other things that are really kind of beyond the scope of this. Injured spouse allocation. If they're withholding some of your, if they, meaning IRS, is attaching some of your refund to pay for a prior spouse's child support obligations or student loan, you can file this form to say, hey, I had nothing to do with that, you know, but this is, again, beyond the scope of what we can help you with. Simple questions on it, you know, but not complicated stuff. If you end up where you owe a lot of money, you can apply for an installment agreement request. It's pretty much automatic, but you've got to determine how much you're going to pay per month to IRS. You can do this. Here's where we already saw where we saw this IP PIN when we did the basic information. TaxSlayer is still kind of finalizing some of these things before the April 12th start date. And I've heard that they were going to take it off of that basic information. And if they did, you may have to come into this screen to put in your IP PIN stuff. So, and you probably shouldn't have to worry about that. So now we'll hit continue. So here's the recovery rebate credit. Now, we already put in information about that, so we shouldn't have to change anything. Here's another one that says Form 7202, credits for sick leave and family leave for certain self-employed individuals. So if you are self-employed and you get COVID, or one of your family members and you can't work because you had to take care of them, you could be entitled to this credit. And it's a substantial credit. Okay. If you're preparing these taxes on your return, you need to read up on this or call us, and we can kind of help walk you through or give you some guidelines as to how this would work if it applies to you. Okay, so I'll hit continue from here. So now it asks you about health insurance, and there's only one reason they're asking you this. And this is, you got to read the question careful. Did you, your spouse, or dependent purchase health insurance via healthcare.gov or the state marketplace? This is the Affordable Care Act or insurance exchanges. If you bought insurance, or the marketplace, yeah, right, it says that. If you bought insurance through the marketplace, what happens is they ask you, how much money do you think you're going to make this year? You give them an amount. And if it's low enough, they're going to say, well, here's what this policy would cost, but your income is low enough to where we're going to give you a subsidy to pay for that. But we're estimating that subsidy on what you're telling us you're going to make through the year. Okay, so that your premium will be lower and you can afford it. Then at the end of the year, they're going to send you a form. If you got a form that said 1095-A, it's going to say, it'll have like 3 columns of 14 entries in it. You'll know what it looks like when you get that. And if you answer yes to this, then you're going to have to use that form to answer the questions on that form, because what it's going to happen is it's going to say, okay, now we know how much you really made, and we're going to compare that to how much you told us you were going to make. And hey, you may be entitled to more of a credit, or you may have to pay back some of the credit that you had. Again, we will help you with that form if you need it. Right now, I'm going to say no, because I was covered through my employer. Yeah, and by the way, you may get some of those 1095s that say -B or -C. Pretty much ignore those. That's just proof that you had insurance, because remember, Trump took away that requirement that you had to have insurance. He took away the penalty for not having had insurance. That's what he took away. Who knows what Biden will do? Nothing for 2020 was still, there's no penalty if you didn't have insurance. So those forms that were proving you had, This question isn't asking you, did you have insurance? It's only asking you, did you buy it through the marketplace? Okay, so I'll hit continue. Then it shows analyzing information. Okay, notice up here, it's showing I've got a pretty good refund coming here. That kind of doesn't look right to me. Usually when I'm doing this, I'm kind of building an expectation, but we'll see. We'll see what happens. Right now, they've put in all of the federal stuff. They're saying, hey, do you want to file a state return? You should never skip this. This would only be as if you lived in Texas or Florida or Oregon and you didn't have state tax returns. Okay, so here we're going to say get started, return. So here we are at the state return. And remember when we answered some of the basic questions when we first started this, it asked you what state were you a resident of? And it created the Arizona return for us. Okay. If for some reason you needed to do it a part year return and then add another state return, you could do it here. We're going to keep this one simple right here. So, and it right away notifies me that, hey, you've entered in a pension that might be a U.S. government. It might be a U.S. government, Arizona state or local government pension. And sure enough, I had Arizona State Retirement System, right? So I'm going to say yes to this. Why am I saying yes to this? Because Arizona gives a benefit. They do a subtraction from income if for several reasons, but the first one here is enter the qualified pension income amount that qualifies for the exclusion for U.S. government, Arizona state, or local government pensions. So U.S. government, Arizona state, local government, you may say, okay, well, how much do I get? It doesn't really tell you anything here, does it? Okay, so I could click on learn more here. What type of income can I subtract on my Arizona return for more information? So let's open that link up. And here's tax layer. It tells you. And here it's going to define the exclusion for U.S. government. There. It says if you or your spouse receive pension income, subtract the amount received. This is important. Subtract the amount received or $2,500, whichever is less. And it can be for you and your spouse. Okay, but only if your spouse also received a pension. But you both had to have received a pension. So here's tax layer again. Enter the qualified pension amount that qualifies for the exclusion. Remember, it said $2,500 or less, and that's me, the taxpayer. My spouse didn't have any. Okay, and here it was kind of warning you that it had. Now, there's another subtraction. If I go back up into here, you can read all about these other subtractions. It's kind of a good thing to do. Okay. There's another one that says for retired pensions for uniform services. So maybe they're getting two pensions. Maybe they retired from the military and went to work for the state of Arizona, and they've gotten two pensions. So this one, if you go research this one, is up to, no more than the pension, but up to $3,500. There's some more things on this screen here too, I'll just briefly touch on. It says, enter certain wages of American Indians. If you are a Native American that live and work on the reservation, Arizona can't tax you on that money. And you can subtract it here. These are all subtractions from income. Okay. There's also, if you're entering this return yourself because you had a lot of brokerage transactions, you need to analyze those because the net long-term gain from assets acquired after December 31st, right? I clicked on that. You can go in here and you can get a subtraction for a portion of those. Okay. These were basically the subtractions from income. So I'll hit continue. We just did subtractions from income. Now, we all know that I took the standard deduction on this return, but something I neglected to tell you when we were talking about, well, should I put in the itemized deductions or just take the standard deduction and skip all of that? Here's another big thing to consider is Arizona will allow you to itemize even if you took the standard deduction on the federal return. Now, why would you do that? Well, Arizona allows 100% of medical expenses. Remember I talked about that had to exceed 7.5% of your adjusted gross income on the federal return. You may find that you have enough itemized deductions that exceed the standard deduction for Arizona. Okay, so again, if you're not sure, I happen to be sure. So that's why I said skip it. But if you're not sure, just go in and enter in all of those itemized deductions, and TaxSlayer will take the better one for you. It'll calculate that. There's also a screen here that's credits. Okay, so earlier when I put in charitable contributions, I said I alluded to that. Yeah, that Arizona credit that I can take, but there's more of them too. Let's go kind of explore this credit screen right here. And the first one we see here is the property tax credit form 140 PTC. This is only eligible to lower income folks who are over 65. Okay, I'm not going to walk through this because although it does pertain to some of our taxpayers, probably not the ones who are doing their own return. However, we will help you. If you're one of these that think you qualify, if you're over 65, your income is, call it below 5,000, there's two thresholds that you got to look at. And by the way, Social Security doesn't count for that. But if you're low income and either you owned or rented, you may qualify for this property tax credit. Call us, we'll help you figure it out. There's, I'm really just going to talk about the main ones right here. This credit for contributions to qualifying charitable organizations. This is, we used to call this the working poor credit in Arizona. Now they call it qualified charitable organizations. This is where you get a dollar for dollar offset of your Arizona taxes. So, in my case, you saw me do that $800 contribution to the Faculty Foundation. It should reduce my Arizona income taxes by $800, or another way, increase my refund by $800. So there's other ones too. You may have paid to public schools for, football uniforms or extracurricular activities, or you maybe have paid into school tuition organizations or foster care charitable organizations. They all kind of work the same way. I'm going to walk you through this one for charitable contributions. This is important right here. Okay. I could go in here and start inputting all of this stuff for qualifying charity and all of that, and it's going to lose it unless I come over here, right over here, select that drop down and say yes. To file Form 321, select yes and complete the information below. If you don't select that, you're going to lose all the information that you input later. It's really important. Okay, so now I'm going to say begin qualifying charity, and I'm going to add a contribution. Name of the charity is the Faculty Foundation. It's a longer name than that, but here's what's really important. Is it asked me for a code, and you have to have this a code. So here it gives you right a link here to where you can go get those codes, and it's really taking you to the Arizona Department of Revenue site. And when I look through here, it's usually pretty easy to find. Oh, here we go. You got to scroll down a little bit. List of qualifying charities. And you see QCO, that's Qualified Charitable Organizations, or QFCO, Qualified Foster Care Organizations. And you've got 2021 and 2020. By the way, you can make contributions in 2021 before April 15th and apply them to the 2020 tax year. So That's why they're kind of giving you this list for 2021. In my case, I made them all in 2020. I'm going to open this form up, and there's a lot of them here, okay? You know, I don't really want to scroll down, and I don't really remember, you know, I put in Faculty Foundation, but then they had this awkward name. It was a long name. You know what? I'm going to use that Control F and search for faculty. I know faculty was part of their name. Oh, here it is. Okay, yeah, it's the Maricopa College's Faculty Foundation. And there's their code, 22029. I can copy that code. I'll go back into TaxSlayer, paste the code right in there. I gave them $800. Type a donation. Yeah, I made this during the tax year, 2020, not between January 1st and April 15th. So I made it during that year. By the way, if you select the other one, it reports it on a different part of the form. And the reason I suspect they're doing that is they want to make sure you don't double count it next year. So keep track of your stuff there. So I'm done with that. Okay. Now, here is something, by the way, I could add another contribution, and some folks, you know, they've donated to a variety of different charities. 800 was the limit for this one for a married filing joint, you know, and so I gave it to our Faculty Foundation. Here is something that's different than what I've been telling you all along, and you watch me when I didn't hit the continue and I tried to go choose from this left-hand menu over here. It warned me, hey, you're going to lose information if you don't hit continue. Well, geez, there's no continue on this. I don't want to lose all that information. This is the exception in the Arizona returns, right? Here, your only choice, you've got to hit back, and it's really okay. And it takes me back to this one. Now I'm going to hit continue, and it takes me back to the credits menu. So maybe you've got some other credits you want to order. You donated to a school tuition organization or something. In this case, I didn't, but oh, look here again. There's no continue. Okay, I'm going to hit back. Okay, now I'm back to the Arizona return. Let's look and see. I just did credits. Voluntary contributions. Did I make any penalties or payments? Is there some miscellaneous forms you can go explore? There's probably nothing that you're going to use on that. I'm going to say exit the Arizona return. But, hey, maybe I forgot something. See these little three dots here? I can go in here and I can go edit the Arizona return. And it takes me right back here to where I could go into any one of those menus and edit. But okay, I'm done. I'm going to say exit the Arizona return. Okay, good. So I'm kind of done with the state. I'll hit continue. And by the way, I can see here, I've got some pretty hefty refunds coming. Not true. And it gives me a tax return summary of my income, taxes and credits. Oh, wow. Yeah, that's that $2,000 child credit. I kind of made all that up. Here's the total tax payment. Here's the payments that I've made. And I could expand this to see, okay, where did I get that? So here's one way of reviewing it. There's my refund. There's my Arizona refund. I don't like reviewing it that way. I like to look at the tax return. And right now we have a chance right here while we can still go in and we don't have to start completely over. I'm going to click on View Return. And what this does is it generates a PDF of the entire return. So I can go start looking at it. It even shows some of the forms I filled in, so I could compare it to the paper copy of what I had. Here's that pension distribution. Here I could kind of compare it to the file. Here's the forms that are actually going to get transmitted. Oh, 1040 SR. Yeah, I'm an old folk. I'm over 65, so they have me do the senior form, right? But here it shows me my filing status. I want to really be careful, you know, do the names match the social security numbers? It's the biggest thing of why you get rejected returns, you know, is those numbers don't match the names, okay? So, oh, and here was that question here. At any time, Did you receive, sell, send, exchange, or otherwise acquire financial interest in virtual currency? What is virtual currency? Generally, we call it Bitcoin, but now they got 15 of them, right? This is saying no. And if one of those organizations reported something to IRS that I had a transaction, I'm going to be getting a nasty letter. So, make sure I showed you where that was. So here it shows my dependent, grandchild, wages, that's what I put in on the W-2. Oh, qualified dividends. Yeah, here I had dividends, but remember I said some of those were qualified. Here's interest. Yeah, I only had 2 of those. So that looks back. Here's my ASRS pension. Oh, bummer. Social Security, $12,000. A moment ago, I said that wasn't taxable. Well, it isn't for those folks we were talking about getting the Arizona property tax credit, because their income has to be below, I gave you a figure, 5,000. It's really like 3,300 if you're single, live by yourself, or 5,000 something if you've got other members of the household. In this case, though, if you have other income besides Social Security, a portion might be taxable. And in my case, yeah, we've got all this other income, and voila, they're going to make us pay tax on 85% of my wife's Social Security. Okay, so what? So then now I've got this other income from Schedule 1. Oh yeah, I got some self-employment income, right? That. So I'm not going to flip around here, but I'm going to be sure I go look at that Schedule 1 to make sure of what that is. And then now I've got some adjustments to income. Again, this is coming from Schedule 1. Oh, what is that? I can tell you, I think that's from a partial deduction from self-employment tax. Oh, okay, good. Here's the charitable contributions. Remember I said I added those in that I can take as an additional deduction to my standard deduction. This is really called an adjustment to income because this lowers my adjusted gross income. Now, I told you earlier that this is the starting point for your state return, which we'll get to in a second. Here now it's reducing my, reducing my standard deduction. Now here I get this other qualified business income deduction. So what this is they're looking at my Schedule C, which was profit or loss from a business, and then I get an additional deduction of 20% of that. That came into being because too many people were complaining during the Tax Cut and Jobs Act that, hey, you're giving all the tax breaks to big corporations. This was to give it to small business people. So this is why that came into being. So then we get taxable income, and here's the tax that I have. This is the total tax that I have. Now it's going to give me a credit against that tax for Asia, for my dependent in there. So that lowered my tax down to $47.61. Oh, other taxes. What's that? I better be sure to go look at Schedule 2, but I can tell you that's going to be my self-employment tax. That surprises a lot of folks, okay? Then it'll show what was withholding from my W-2 and my pension statement. So here was all the payments that I paid in. And then, oh, look, I got a recovery rebate credit. Oh, I better be careful about that. Okay. So I'm going to want to go make sure that that calculated correctly. Okay. So, yeah, hey, I got a big credit there. Good deal. So that increased my payments. The credits really increase your payments. And then now we're on to the third page of the return. And this line is saying take the payments minus, here's your total tax, and the rest we're going to refund you. I get a pretty big refund right there. Let's go look at some of these schedules. Okay, by the way, it's showing me here's my standard deduction because I'm over 65. Both Don and I are over 65. We're married, filing joint. Here's Schedule 1, additional income. Okay, sure enough, here's the business income or loss attached Schedule C. So that's why it's doing that. But now here's part 2, adjustments to income. And so I get to deduct part of my self-employment tax, that Social Security tax for self-employed people. That's because, remember, I said you pay the employer and employee portion. Well, if you work for somebody else, your employer, like I work for the community colleges, they got to deduct their contributions to Social Security for me. So if you work for yourself, you get to deduct a portion of that self-employment tax, the employer half of it, so to speak. So what else we got here? Additional taxes. Yeah, sure enough, there's my self-employment tax, $761. Interest and dividends, we kind of see that. Here's that profit and loss for a business. So it did calculate correctly. It took the 10,000 from my schedule NEC. And then remember, I added in an extra 500 in there that I said that I got, for doing this. And then here's where it calculated my car and truck expenses. It took the standard mileage rate. Here I put in some travel deductions. So here's my net profit. I want to point you towards the next page, which was information on your vehicle. And remember what I told you? It asks you to put in your business. It asks you to put in commuting. It asks you to put in other miles that you drove, and then answer these questions. And then you're signing the return. So if you get audited and they say, well, let me see your evidence, your written evidence of your mileage deduction. Oh, I don't have it. Well, don't say you don't have it. Say I lost it. I can't find it. Okay, and then they're probably going to take away that mileage deduction that you had. But you don't want to say I signed the return without having evidence of it. Don't do that. Get the evidence while it's fresh in your mind now. Here's how they calculate your self-employment tax. They're putting in this form because I won't bore you with that. Here's that qualified business income deduction that they calculate. Child tax credit. I got all of that. They give you a worksheet. Remember, I said some of my dividends qualified for a lower tax rate. Okay. Then there's another worksheet here. Yeah. Here's one you might want to look at. Why did they tax my Social Security? Now, this one will probably give you a headache, but if you're curious, walk through this worksheet. You can see how they came up with, I had to pay tax on 85% of that because my other income was too high. Here's that recovery rebate worksheet. And here's what's going to happen. I'm going to sum it up for you here. What happened is I said, hey, we didn't get the second payment. So we know we got 600 apiece for that. So there's 1,200. But also, I said in 2020, we had a dependent. And that wasn't on my 2019 return. So I should have got money for the dependent too. So there was this. So anyway, if you look through that, that's why I got the thing. And then now here's the Arizona return. And just real quickly, we'll go for that. Remember, I say the starting point was your federal adjusted gross income. It took off $2,500. That was my subtraction for the pension. Look at this. It also, Arizona, even though the federal government is going to tax some of my Social Security, Arizona doesn't tax it. So TaxSlayer automatically added in the subtraction for that. So now we get kind of down here to my Arizona income. And then Arizona also gives us, for if you're over 65, $2,100 a piece exemption. So then we get down to Arizona adjusted gross income. They took off the standard deduction. But look at here, I get another charitable contribution. And there's a form at the end that will show you they're giving a 25% of other charitable contributions after they do some adjustments for it. I won't complicate it. So now it says, here's my Arizona taxable income. Here's the tax in Arizona. Hey, they give me $100 credit for my dependent. And by the way, here's that $800 for my qualified charitable organization credit. So when it gets down here, I didn't pay a whole lot of Arizona tax. Had a bunch withheld, and I'm going to get a bunch of that back. Here's how they calculated my additional standard deduction. Here's the credits. I won't go over those, but hey, you want to look through this form, and this was a PDF. You could save it if you're not going to make anything. It was about to kick me out of this session. I'm glad they didn't. So here's the tax return summary. I'm going to hit continue. So it's calculating and say, hey, yeah, am I ready to file? I'm going to say, yes, I'm done. Ready to file and hit continue. Because now it says here, if you're done, we've got to get some final details and finish up. So there's a few more steps here we've got to go through. So we'll hit continue. So now it's saying here, just a few more details. You're almost ready to file. Choose how you want to receive your federal refund. And I'll hit continue here. I highly recommend you do direct deposit. Okay. It's safer. You know, thieves are looking in mailboxes about the time refund checks are coming, and they can get those checks and doctor them and go deposit them. You know, it's just really safer if you've got a bank account and you put it through direct deposit. The other thing I would tell you is, we know from when the pandemic last year, man, it took them a long time to send out these checks. So, you know, if you just don't want to give up your banking details, I understand, you know, and you're not in a hurry to get the refund, you know, go ahead. But I would say select direct deposit. I'll pick direct deposit, say continue. I'm going to go make up, oh, now it's going to ask me state. How do I want state? I'm going to say direct deposit, continue. Now it says, hey, there's other products and services. Here's what they're going to charge you. But remember, this is free. Okay. How do you want to pay for your fees? I'll go ahead and hit continue just to make sure that they're not trying to charge me any fees. Yeah. Okay, good. Free. Good. So now we're going to say sign and file. I'll hit continue. Okay. Now it's asking me, and this is an IRS thing too. So they're not, you know, they're not trying to sell you anything, but it says, do you want to put any of your refund towards savings bonds for yourself or someone else? I'm going to say no. Hit continue. Now it's asking for bank account information. I'll make up some stuff. Kind of want it checking or savings. Continue. Okay, good. And it's showing deposit amount. I'll say continue. But now it's going to ask, where do I want to deposit the Arizona one? We'll say Wells. Continue. There's a way that you could split up your refund between two accounts. And I missed that somewhere in there. I could go back and edit it, but there's a way to do it. Here it's asking for ID information. And it says, you can provide this information. I'm going to just select here that me and my spouse do not wish to provide. I don't think it's going to stop you from filing on it. Some states are requiring this, that you actually put in like a driver's license number. Arizona hasn't quite got that far, I don't believe. I'm pretty sure that they haven't yet. So then I hit continue. Now it's going to ask me to confirm my identity. And it does this through a couple ways. It can ask you, it's going to go look at the adjusted gross income on your 2019 tax return. So if you've got that, you could use that. Probably a simpler way is just saying, no, I cannot locate it. And then it's going to have you put in a PIN number. And put in a PIN number that you would know. I'll put in a zip code here. So that was it. Double check, make sure it is. That's good. Donna, no, we don't have my last year's tax return. We'll put in the same PIN for her. Put in PINs. Okay, confirm it. Good. They ask you to confirm everything again. Now I could create a self PIN for this year. meaning 2021. So they'll kind of have that all ready for you. Continue. So, okay, keep saying a few more details, right? That's okay. Okay, so now I can say sign and file your return. There's going to be one more verification. It's got to send you some. I want to be careful. I really don't want to file this return. And I know there's one more verification, but I'm going to stop right here. The last couple things, I think they send you a text message or an email message, again, reconfirming and have you look at it. I want to make sure I don't accidentally try to file this return with a bunch of fake information. So just in summary, there's one other thing that I want to go back over with you. Before you e-file the return, you can always go back into any of these sections, right? And modify something. Or like me, I just did a fake return here. And now I was practicing, right? I just wanted to see what things would look like, okay? But now let's just pretend that I really want to go file a new one. Up here in the menu, and by the way, if it's hidden, it's because you got to move your mouse cursor over there and make it there. If I go into my account, and it's showing me the two returns that I've done here. But what I want to do is I want to go click on this settings right here. And then I'm going to look at transaction history. Because what I'm going to do is I'm going to delete these returns and start over again. Okay, so I click on transaction history. I want to deactivate this return, this tax year return with the fake social security number, right? It asks me, why do I want to do that? I'm going to say, don't save any of my information, not using product, don't want to do it. If you say made mistakes and want to start over, I think it's going to maintain some of your basic information, right? If I told you at the beginning of this video that if you got down to the end and it's starting to charge you a fee, you clicked on the wrong link. And I don't know if this would help you or not, choose wrong package. I would delete this return completely and then go start from the proper link. You should still be able to log into the account that you've created under this method here. But for right now, I'm going to say not using product, don't save my information. Clear return and restart. Do you want to deactivate this return? Okay. And here I am right back at the beginning. So to just sum up, we took you through a long process of inputting a lot of forms. This video could be very helpful. You probably don't want to watch the whole thing anyway, but you'll fast forward through the sections that you need to get to or return to look back up again. But remember, we're always here to help. All of the partners who offer this service, it's called Facilitated Self-Assistance, and we will help you get through this. And we'll answer all the tax questions that we can. We want you to file an accurate return. We want you to get every bit of money that you're entitled to. So thank you for watching this video, and this will end it.